Let's dig into all of the news with our floor show. Let's bring in Prosper Trading Academy CEO Scott Bauer. Scott, it's good to talk to you. You know, you're making some interesting bets after the CPI report. You say complacency is back, especially after this report. You know, I was reading some notes from Tom Halen. He's over at U.S. Bank. He said that basically the direction of the market, with no surprises like we did not get today, means that there's been nothing to derail this market from melting up into the end of the year. What do you make of that comment?
I don't disagree with that whatsoever, and there is a lot of complacency. You know, you just mentioned that after the CPI report this morning, 95% plus probability of a rate cut next week. At the same time, though, Cheryl, we're seeing the long end of the curve ticking up a little bit. We're seeing that 10-year as high as it's been in a couple of weeks here. So what the narrative is to that is that even though, you know, this inflation reading came in right in line and the Fed is more than likely going to cut next week, anyone's bet for what happens going out into the future. In fact, the January probability right now is only a 20% probability for another cut in January.
Well, and then I'm looking at the predictions for next year, but right now it's only 2 cuts in 2025, and I question that idea simply because what we've seen is the inflation dragon was not slain this morning at all. In fact, we did see a pickup month over month on the headline number, in particular the year over year. Now, it's 0.1%. I mean, I'm not saying it's something large, but at the same time, if you dig into the actual breadth of the report, I mean, this is the cumulative impact of price increases that we have seen over, well, the last 4 years and over the last year. And so if you overall, you know, the Fed might be, you could argue, hitting a wall here.
I agree with that. There's no question about it. And yeah, there's no question about that. It is stagnated quite a bit, and they'd like to see that coming back down. But so much has been the focus on the employment market. And, you know, that's really where the directive, that's where the narrative for the Fed is going to be. What are the numbers going to come out when we get the next report in January? How is that going to reflect what happened to the economy during, you know, holiday shopping season? And then maybe that plays into changing that narrative for the year. However, what I am looking at right now, Cheryl, and behind me is the S&P 500 options pit. Right across from me over here is the VIX pit. Even though we're seeing this complacency right now, there is a lot of upside call buying in VIX January expiration calls. Now, those calls expired just a couple days after the inauguration. We're seeing upside call buying at the 20, 22 strikes, a lot of upside call spreads. So what that tells me is there's a lot of retail, maybe even institutional paper out there that's saying, okay, you know, smooth sailing till the end of the year here, but as we get closer and closer to that inauguration, which also includes the next Fed meeting there, that's where the volatility is maybe going to pick up.
Explain to me, though, the correlation between the VIX and Inauguration Day, because one of the reasons the markets have been powering higher is based on the Trump trade. And while you do have some analysts that say that the Trump trade is losing steam, and maybe you're one of them, and maybe that's what the bet is here, explain to me how, when we haven't even begun the first 100 days of a Trump presidency, that Inauguration Day would be that magic mark. I'm not sure I understand that thinking.
So it's not so much that the inauguration day is the magic mark as it is that's the January expiration date of January 22nd, which coincides, you know, right there with the Fed meeting. But also, I think there is a little bit of a narrative out there that as we get closer to the inauguration, maybe some of these, you know, plans, the tariff issue and some of the other things that are on, you know, the incoming president's agenda, that they start to really roil the market. So with volatility right now so incredibly low, that's what I'm looking at. One other thing, Cheryl, in the history of the S&P, only twice has 30-day implied volatility or protection been cheaper than it is now in the S&Ps. So if somebody wants to ride this marketplace, Santa Claus is here, they want to ride it into the end of the year, you know, it's going higher, now is the opportunity to buy that really cheap insurance, to buy that protection that gets you out a month from now. It literally 2 times in the history has it ever been cheaper.
Scott, I think it's not Santa Claus so much as it's Donald J. Trump right now. But let me ask you about this because, you mentioned fiscal policy, and I think that's really important to bring up to our viewers because we're sitting on right now as a nation over $36 trillion in debt. And that sustainability, just in the payments that we're making on the interest is something that is a market factor and does affect investors in particular. So look, if Elon Musk and Vivek Ramaswamy can actually deliver on promises, maybe they can cut $2 trillion in spending, we shall see, in debt. At the end of the day, it's if this plays out or not, which is a Washington story. Has there been any other year in your recent memory where it's been so crucial that we get the nation's deficit under control and the debt under control?
You know, it seems we go through this, whether it's annually or biannually, where we run up to budget constraints and record deficits. But you're right. Right now, it is absolutely critical, and that's because of the amount of interest that we are paying. You know, when we had set previous records, interest payments weren't as big as they are right now. But they are so large, that is going to eat into GDP. That is going to eat in to the health of the economy, and it is unsustainable. So I hope that they can find places to cut. I kind of have my reservations about that there's really a lot that they're going to be able to really look at and put into place. But yes, we absolutely need to get the House under control.
Okay.